Thank you for joining us today for this short video. Today we're going to discuss a little bit about the USDA home loan application process. We receive many questions, especially from first-time home buyers, in regards to the application process and how to start the application process and what all it entails. So we're going to cover a little bit about that today. For home buyers that have questions, of course, always visit us at USDAmortgagehub.com. Call 1-800-691-8826. We do service all 50 states throughout the nation. First, before we discuss the actual process, we're going to talk a little bit about the USDA loan advantages and just do a brief rundown on that. First and foremost, the program, of course, is no down payment. It's 100% financing. It's a government-backed loan by the United States Department of Agriculture and Rural Housing, designed to help expand America's rural communities by offering favorable mortgage terms. Closing costs with USDA loans, there's a variety of different options to also reduce the out-of-pocket expenses from buyers by allowing home sellers to pay all your closing costs, or rolling the closing cost into your loan with a higher supporting appraised value. So USDA does give added flexibility in regards to closing costs. USDA loans are also for any home loan applicant. It's not exclusive for first-time home buyers. You're not required to be a first-time home buyer to apply. The program does not have any loan amount limits. Borrowers qualify based on their debt-to-income ratios and, of course, income. The program has low monthly mortgage insurance, commonly known as PMI. The monthly mortgage insurance is nearly 40% less when you compare it to an FHA loan. And then home buyers are also surprised oftentimes to learn exactly what is still considered rural eligible. There is the USDA map online where you can look up your address or neighborhood and take a look at that, but oftentimes many areas that you wouldn't think are still eligible are. First and foremost, when starting the application process, borrowers need to determine really what are your basic goals? What exactly are you looking to accomplish? What type of home are you looking for? Are you looking for a single family home, a townhome, a condominium? What is your budget for the home? What are you looking for as far as a purchase price, monthly expenses with taxes and insurance and all those things? The loan specialist that does the qualifying, of course, will let you know what you're qualified for based on the guidelines and the debt-to-income ratio guidelines that are set in place with the program. However, that doesn't necessarily mean you're going to be comfortable with spending that. Oftentimes, buyers can qualify for more than what they actually want. So you want to determine first, before any loan specialist tells you, determine first exactly what you think you're comfortable with. How are your finances and credit? Do you need to fix anything on your credit before you apply? Are there any lingering credit issues from the past? Those are some things you want to think about as well. And what mortgage program fits you best? USDA may not necessarily be the best option for you. It just depends on some variables in regards to eligibility. That's the first thing with the USDA loan, is you need to determine if you are eligible. There are critical eligibility factors that must be met, and then there are qualifying standards that are like most other loan programs out there. So to determine if USDA is the right fit, are you looking, the two critical things are the location of the property you're going to purchase and the income for the household. Those are the two things first. So you can make sure that your area is eligible, and then also your household income is below the county limit. Each county will have a different income limit for the program, and you want to determine that you do meet those two things first and foremost. And then also, do you fit the USDA loans qualifying requirements in regards to the minimum credit and things of that nature that we'll look at in the next slide. Minimum qualifying requirements, pretty much the same as most of the other government loan programs or conventional loans. Credit, most lenders and banks, approved USDA lenders will want to see minimum credit scores of 620. Some are 640. There could be some fluctuations depending on the actual mortgage company. They do change their own in-house requirements. In some cases, that's called overlays is the term for that. But in most cases, a 620 credit score will be needed to be approved for the USDA program. Keep in mind, though, a 620 or greater credit score does not guarantee loan approval. There will be additional waiting periods and stipulations for any applicants that have experienced serious financial hardships, like a recent bankruptcy, home foreclosure, or maybe short sale. A lot of times, again, regardless of how high your credit score, a mortgage company may require you to wait 3, 4, 5 years until you meet those requirements as far as the waiting times. Employment history, 2 years of stable employment with no significant gaps in employment. This basically means that you do not need to maintain the same employer for a 2-year period. You can switch employers. What USDA is more concerned with is just a stable history. An example would be is, let's say you're a nurse, you work at one hospital, you basically resign from that position and go work at, maybe you take a couple weeks off in between and then you go work at a new hospital and you're still a nurse. That would be perfectly okay. There's no problems with that. Really, they just want to see that there's no significant unexplainable gaps in employment. Those things are going to be looked at. But yeah, any changing jobs within 2 years, you know, most people go stop one job and they pretty much immediately go into the next job with a different employer. That's perfectly okay. Banking and assets, you want to make sure that you can also document all your recent deposits out of the ordinary. That's going to be important. Any deposits, payroll deposits, things like that, those are normal and to be expected. But any deposits that are out of the ordinary, those are things that you're going to want to be able to document. Starting the application. First and foremost, the application is going to be, generally it's done over the phone in about 20 minutes, 30 minutes. Applicants will also have the option to go online and complete their application or do it by mail. But most choose just to do it over the phone, and again, it's a very quick process. The loan specialist will ask some basic things. First off, they're going to want to have your living history for the past 2 years. So know all the addresses you've lived at in the past 2 years. Your employment history for the past 2 years. All your employers' addresses, phone numbers. Again, all this information that they're going to ask, most of it, 99% of it, you will likely know by heart. There's not going to be many surprises there. Know your income, of course. Are you getting paid hourly or is it a monthly salary? Know the amount and the duration, of course, of your income. And then your banking and asset information. Who do you do your banking with, of course. And then any retirement accounts that you may have, like a 401k or IRA account. Know who those accounts are with and the balances in those accounts at the time of application. Again, most of these things are basic. It's just basic information that you will likely already know. As far as the application documents needed, you will want to have, and this is copies for everything, originals are not needed, the last 2 years of your tax returns and W-2s, last 2 months of pay stubs and bank statements, all pages front and back, even if they're blank. Also a copy of any retirement account statements like a 401k statement or an IRA. and then a copy of your ID or driver's license, passport, just some form of ID. You want to make a copy of that. Keep in mind that applicants that call and just want to get a simple pre-qualification, oftentimes they can do that just over the phone very quickly through the basic information, and then the lender will obtain a credit report and then issue a pre-qualification. A full pre-approval is going to require the lender to have these documents from you. Basically, a pre-qualification is they go by what you have told them. They go by your word. Okay, if you told them your income was X, they're going to assume that, okay, in fact, your income is what you told them. For a full loan pre-approval, though, they're going to verify those things. Okay, so if you told them your income was X amount, they will get the supporting pay stubs, supporting tax returns, and W-2s to show that your income is in fact what you told them. So that is the difference between a simple pre-qualification and a full loan pre-approval. In a full loan pre-approval, they'll collect all the documentation and verify everything, of course. Okay, and home buyers, applicants, they have the choice to do either or. Okay, generally a pre-qualification, though, that is just getting the information over the phone, pulling a credit report. They'll have your debts. They can compute everything they need to do, and then basically pre-qualify. That can be done very quickly, oftentimes in under 30 minutes. Home buyers that have questions or ready to apply, of course, visit us at USDAmortgagehub.com or call us 7 days a week, all 50 states nationwide, 1-800-691-8826. We appreciate you taking the time to listen to this video, and again, please reach out to us if we can be of any assistance. Thank you.